Copy of this. We had previously electronically sent that to you. I was going to walk through this kind of high level and answer any questions that you may have and kind of go from there. On slide 3 is the scope of services which we are engaged to perform, which was an audit of the December 31st, 2013 financial statements, performance of the OMB Circular A133 single audit, as well as review of the data collection form, observations during the audit process, and then working with management on a year-round basis. On slide 4 is the results. We plan on issuing an unmodified opinion on the financial statements. What that opinion says is that the financial statements as presented by management are reasonably free of material misstatement. It is the best opinion that we're allowed to issue under generally accepted auditing standards. We discovered no instances of fraud. Our audit is not a fraud audit. A fraud audit would be different in scope. However, professional standards require that we maintain a healthy skepticism for fraud, to inquire for fraud, to look for fraud in as a part of the different test items that we would look at. However, and I can report to you, we noted no instances of that, nor were we made aware of any instances through the course of the audit. But there isn't any more assurance that we can give you because a fraud audit would be different in scope. We did note various material weaknesses and internal controls over financial reporting. We'll discuss those on a later slide. We had various restatements from the prior year. We received the full cooperation of management, and then we posted a number of journal entries for various audit adjustments, and we'll go through those in a moment as well. On slide 6 is a pictorial of our risk-based audit approach. What the idea behind this audit approach is that we spend time assessing where the risk of material misstatement would be, how management has designed controls, and then audit through that process through that. On slide 7, risk is really in 2 factors, and one is what are the environmental pressures, management decisions, and these are just some of the different risk indicators that we looked at as part of the audit. On slide 9 is another pictorial. What this one is goes through and says how we assess risk at a financial statement level, that is in the individual accounts, and what we do working through those processes, understanding what could go wrong, i.e. what is the risk, what are the controls that are in place to mitigate that risk, evaluating, monitoring that, and then ending up with our report. On slide 10 is some of the internal controls of financial reporting. As part of the financial statement audit, what we're doing is we're really assessing how management keeps the books, looks at the numbers, not necessarily that were the dollars that were spent during the course of the year done in the best manner set forth. So if you will, if management were to make a hire of a person and that person didn't do their job, all we would say is that, yep, that salary is in there, not opine on whether or not that person did their job. I'll come back to that in a moment. That's one of our recommendations that we have later, but our focus is primarily on the underlying processes and functions that as they relate to the numbers that are included in the financial statements. And we've listed the key processes and underlying functions that are there that we looked at as part of the process. On slide 12, goes through some of our observations, and I'll kind of go through these high level. Please stop me with questions that you have. The first one of which is the pension fund activity is really not recorded in the general ledger. Rather, the activity is reconciled, so back to the general fund activity, but there isn't a separate set of general ledger accounts that's specific for the pension funds. Rather, how management keeps it is based upon the bank statements, investment statements that are received from the different trustees. There isn't, if you will, a GL balance that we can say, cash per trustee or investments per trustee, and then you can reconcile that to a statement. That being said, we do know that management records and reconciles the activity, the contributions that came in, as back to the expense that's included in the general fund, as well too as the benefit payments that were made. However, from a financial reporting standpoint, kind of the first thing that we would look at is to say, where are the books that we would be able to look at a balance sheet and income statement and be able to reconcile that item. So professional standards would deem that would be a material weakness. Along with that, we noted that there's a lot of commingling of activity, benefit payments between the general fund and the different pension and OPEB activity, that there could be a payment that's made out of the pension fund, out of the general fund. This really should be made out of the pension fund, and then there's a repayment that was made. And then when we got to kind of the end of the year, what it was is almost this puzzle, for lack of a better term, of having to disaggregate what was the pension activity that was included in the general fund versus what is the core activity of the general fund, and getting those items to line up. Management was helpful through the process and gave us the information that was there. But once again, what we would expect is, here's the number, the pension activity is recorded in the pension GL, general fund activity is recorded in the general fund. And you're going to have some activity that crosses, but not at the level that we saw. In the community development loan or community development fund, there was a number of loans receivable, and this is a purely accounting item that we looked at that in the course of the prior year's audits and what was reported, there was a number of loans that have been foreclosed upon, and once you foreclose upon a loan, what GAAP would tell us, or accounting principles generally accepted in the United States of America, that asset recorded on your books is not realizable. So if you will, if I owed the city of Hazleton $100,000 and then you foreclose upon that loan and you're not going to collect it, you don't have a $100,000 asset. You really have significantly less. So, and then as well too, that there were two loans that were 30-year loans at 0% interest that are payable in 30 years. So if you will, that same $100,000 that we're talking about as an example, if you made that loan to me, I'm not paying you any interest. I don't have to pay you back that $100,000 for 30 years. And really, from an accounting perspective, what we would say is that's more the form of a grant that has some loan clawbacks, but really the present value of that loan is really zero, because it's not a real asset that you can, you can't sell the loan. It's not something that could be readily moved to cash. So we proposed an adjustment. Management agreed to it that restated opening balances by approximately $600,000. That is reducing the opening net position of the fund by $600,000. We also noted that the city has entered into a monetization agreement for delinquent property tax receivables. This was disclosed in the last year's audit. However, the way that this process works is that a third party upfront funds the cash back to the city, and then we'll go and collect those delinquent tax receivables on your behalf to make the payments that are there. However, if they are unsuccessful in collecting those receivables, the city would then have to pay that back to them. So really, what it is that you've borrowed from the third party funds on this property tax receivable. And last year, and so it becomes a gross up of the statement of net position that we put an asset back on the books for approximately $250,000, and then there's a liability on the books for $250,000. During the course of the year, we know that this wasn't tracked or otherwise monitored by management. It was something that management had brought to our attention as part of the audit, and then we recommend that this really should be looked at on a more routine basis and reconciled to the actual activity, and ensure that at the end of the day, the city is not that you're not ending up writing a check for something that they have collected, and you can reconcile that activity back. There is a number of interfund activity, that is where one fund will owe another fund money. We noticed that there was a lot that had no activity during the year. That is that you open the year with the general fund being owed by or the Act 205 fund being owed by the general fund, say, and I'm making up numbers at this point, $100,000. But that was the same balance that was as the beginning of the year. And really what we would expect to see is that should be a short-term borrowing. It should be paid back during the course of the year, unless there's some form of a more formalized agreement that would be a true borrowing from one fund to another, or should be treated as a transfer, because that money is not going to come back to that fund. And so looking at that more routinely during the course of the over the course of the year to be able to determine that, are those funds going to be paid back? Yes, ma'am.
Would you recommend transfers come in front of council then?
Anything that budgetary, that's a budgetary amendment, we would recommend that's transparency and should be brought up. That being said, there should be some autonomy that's provided to management to, exercise managerial within a fund. But from one fund to another, when you legally enact what that budget would be for that fund, if that fund is overspent and needs additional funds, or to go and say that there's going to be an additional expenditure out of, say, the general fund, that should be considered and should be brought forth to council.
Thank you.
Thank you. There's a number of new GASB pronouncements. We'll talk about that in a little bit with the numbers and just making sure that those are looked at. We also noted that there's various accounts that are kept on a cash basis and not a full accrual basis. Once again, this would be an item to say that works for managerial purposes, but for financial reporting purposes, we have a number of adjustments that we had to book to be able to properly state the financial statements. But what we didn't feel like in that is that there was really an underlying error, if you will, rather that the moving from a cash basis accounting to a full accrual basis. The last two kind of go together, that there's we didn't see where there's a formal risk assessment process for mitigating the risk of financial misstatement, and we also noted that there was no internal audit or performance audit function within place of the city. And our recommendation is a best practice that you do have that function in place, because there's a number of different items that go on. And as I mentioned earlier, our responsibility is to say, hey, that the financial statements as presented, you can rely on those numbers, that they're reasonably stated. We're able to opine upon that, but not necessarily that did the city go through a process to say, here's what we expected to achieve with the budgetary amounts in this particular fund. Here's what we wanted to go through and accomplish, and having a performance audit done that would then bring that to the forefront, that would say, hey, we were going to spend X dollars and we want to have this as a performance measure, and then having a semi-independent party go through and be able to audit that and then present those results back to you. Additionally, as well as going through and saying from a budgetary perspective, when budgets are submitted, having another independent person who can go in and look at the underlying detail to assure the council that the amounts that are being presented are what is the real plans, if you will, and the information can then be brought forth in a transparent manner from there. It's a best practice. Lots of municipalities have this in place, and we feel that when it's put into place, then will provide a greater level of internal controls to the city. On slide 14 is our assessment of the control environment, and based upon the number of recommendations and the material weaknesses that we noted, we have suggested improvements. And what we tried to do is, these are the key points to consider. We highlighted or bolded, if you will, where we thought that our recommendations lined the most up with. And we follow the COSO model of controls, that is control environment, risk assessment, control activities, monitoring, and information and communication. And as I mentioned, kind of all these areas we have suggested improvements. On slide 17 of the presentation goes through the summary level financial statements, and this is at an entity-wide level, or if you will, a full accrual level that includes both the transportation department as well as the governmental activities of the city. And you can see that total assets are slightly down from last year, of a total of $35.7 million versus $36.3 last year. Liabilities are up 30.9 versus $29 million. And what's really driving that is the underfunding of the other post-employment benefits, the annual required contribution. The actuary determines that on an annual basis at about $3 million. The city funded about $900,000 of that. So you have an increase in that long-term liability of about $2 million, which is offset by the normal scheduled payments on other debt that was made during the course of the year. And then your total net position, you can see that you're down from last year, once again, largely as a result of that that non-funding of OPEB. One of the items I want to bring to your attention is GASB 67 and 68, which is new accounting that will be in place for starting in the year ended December 31st, 15, that will require the recordation of the net, what is called now the net pension liability on the face of the financial statements. What the net pension liability is the difference between what your current market value of investments in the different pension funds versus what the actuary determines as your discounted pension liability. And we currently disclose that information within the financial statements. We use a different term called the unfunded actuarial accrued liability. So in today's dollars, that difference right now is about $32 million. So if you will, there are some differences in how the actuary will calculate the number that may change this, but just kind of a back of the envelope that if you use the current accounting, you would say that you would have to record an additional liability of $32 million, which would effectively double the total liabilities of the city on the face of the financial statements. Additionally, there's another standard that will be coming out, which will be happening 2 years after the pension standard is effective for the city, which would require a similar recordation of the OPEB liability on the face of the financial statements. So, once again, that information is included in the notes to the financial statements. So, if you will, a user of the current financial statements, banks, what have you, currently, and we know rating agencies do this now, that will take and pro forma your statements based upon what's in the notes. But all of that information will be brought forth and will be put on the face of the financial statements over the course of the next couple of years. Okay. Slide 18 is a three-level summary statement of activities and changes in that position. You can see the increase in taxes as a result of the increase that occurred in 2013, and then that expenses are relatively flat from year to year, which then from 2012 to 2013, you can see that 2012 there was a $5.4 million loss, and versus 2013 there was a $1.8 million loss. And just once again, kind of keeping in mind, if we back out that OPEB of $2 million, which is really a kind of a future funding accounting item, almost on a cash basis, the city was break even or better than break even for 2013. On slide 20 is our specific required communications. Number one is that the financial statements are the responsibility of management. Our audit is designed in accordance with auditing standards generally accepted in the United States of America, provide reasonable rather than absolute assurance that the financial statements are free of material misstatement. As I mentioned earlier, we plan on issuing an unmodified opinion. We looked at the significant accounting policies, how those accounting principles were applied by management, and felt that those items were fair. On slide 21, we summarized the adjustments that we had during the course of the audit. We had the recordation of all pension fund activity, the write-off of loans receivable of about $600,000, write-off of bond issuance costs as a result of implementation of a new GASB standard of $126,000, recordation of the monetization agreement about $223,000, recordation of accounts receivable of $1.4 million, and payable of $187,000 for the transportation fund. As I mentioned earlier, we noted no fraud or illegal acts. We had no disagreements with management. We had no serious difficulties in encountering performing the audit. We worked, we had no major issues. We will receive a management representation letter. We can provide you a copy of that letter at your, if you would like that. We noted no consultation with other accountants, i.e. opinion shopping. And lastly, we go through a process to ensure that we're independent of the city, and I can testify to you that we are independent. And the remainder of the presentation goes through some items on just some educational slides on fraud, what our responsibilities are, kind of how it potentially can work through the city, and not items that I definitely need to bring to your attention. I know I kind of went through that fast. I didn't know if there's any particular questions I can answer for the council.
I guess you worked with Tom on.
Correct.
And he was mostly the person you dealt with?
Yeah, Tom and his staff were the folks that we primarily interacted with the exception of the folks in the transportation department and the folks in economic development, kind of, if you will, pods. If there were questions on those, that's where we went to.
The program that they use, have you dealt with that in other municipalities? Or?
When you say program, do you mean the general ledger software?
Ledger that they use.
Yes. And there are certain limitations to the software. It's somewhat dated, but at the same token, it does provide the information that's needed. What we found is there's some decisions on how it was, some of the way that the charter accounts was set up, as I mentioned earlier, with the different, not having a separate set for activity or general ledger for the pension funds, and then you have that activity commingled in your general fund. You go run a report, and then you're showing, $500,000 that's shown. That's kind of, well, where does this go, and how does this fit into it? And then what we were doing is then tracing through the system, and we were able, Tom and his group was able to show us, here's where this one is, here's where this one is, and run the reports. But in a lot of ways, the city shouldn't have to go through that step, and should be set up.
Because we have a hard time tracking the money ourselves.
Yeah, I was just going to make a comment. This one bothers me a bit, and I think it would a lot of people, that the city does not currently reconcile interfund activity. It almost makes it sound like sometimes there's borrowing from Peter to pay Paul and shuffling of monies back and forth from different accounts. And I think in your report here, I think you mentioned 10 different accounts, if I'm not mistaken, there was.
Yeah.
I could be wrong on that. It could be larger.
One of them.
Yeah, bear with.
I'm trying to find the page it was
Yeah.
on.
But if some of them are cash and some of them are check or accrual basis, and it seems like that would become quite confusing.
Well, and
not only in how you're keeping track of your money, but how the money is actually being spent.
Well, not only how the money is being spent, but what is the expectation from one fund to the other?
Okay.
And
Other funds.
if on page 37 of the financial statements, kind of breaks out the interfund receivables and payables. You can see that across the city, there's about $1.1 million of different payables and receivables across the funds.
Yeah.
And as I mentioned before, some of these funds had no activity from last year to this year, and what we would say is, wait a minute, is that really should have been a transfer? Is there an expectation of repayment that's going to occur, and going from there? But one of the things we also looked at, and you could have this as a problem down the road, and I want to stress that this is a future-looking item and not today, is that sometimes what will happen is that the way that you can show that, hey, our general fund is doing okay because, all these other funds are, if you will, the airport fund currently has a net deficit fund balance. Well, if there was a large due to, or due, if the general fund had a due from the airport fund, well, how's the airport fund going to pay that back over time? And really what now happens, so we have an asset on the general fund that isn't a good
That they've done their billing through the general fund, and for years, things were not paid back.
Right.
So the airport actually owes the city a lot of money.
Correct.
In keeping with reconciling the interfunds or the interfund activities, and looking at the internal audit, do you suggest and I know it's not your job to do this, it's part of ours to try to figure out ways to do this, but is this a controller job? Is this something that can be done within the body of government itself right now, or are we taking a look at something that we need to add a feature to government to conduct this internal auditing on some kind of regular basis throughout the year, so that when you guys come on in or whoever comes on in, we've got everything kind of already checked on out, and we know where we've been for the year, but here, it's your job that you've got to still do, because we have to have the audit.
Well, and I think that when you look at it, whether it's a controller or whether you go and you add a separate component, there are plus and minuses to both strategies to go and make that happen. You know, of course, you know, anytime you say adding another full-time position is a cost. But my experience, and you know, I can't speak for what future can happen, is oftentimes a good internal auditor will pay for themselves, you know, over, you know, time over, given that they can find the items of where there is. I kind of always use the analogy of what government tries to do is, you know, if you picture a barrel and what you're trying to do is fill the barrel with water.
Right.
And you work really hard to put more, you know, you're trying to fill the barrel up and you're working really hard to put more water in the barrel, but you got holes all through the sides of them, and instead of focusing on those couple of holes, you focus on trying to put more water in, which is more work, as opposed to having a slight investment that would then go and say, yeah, we can plug this hole, we can plug this hole, we can plug this hole, and then all of a sudden you don't have to work quite as hard at the top to be able to put to put the funds in.
I have a question about the sewer transmission fund, and this has been going back and forth and whatever. We turned over our sewer lines and whatnot to the sewer authority, so we're no longer collecting the sewer transmission fund money. But we did have a balance in there. Now, whether the balance could be used for something other than what it was, the fee was put to the public for, because it's a dedicated fund, was a major question. They keep saying, oh, it's no longer, we don't have it anymore, but that money was collected for a specific purpose, and it's called dedicated, and that's what it should have been used towards.
Right. Yeah, and I would have to defer to management on the details of that. It's included as not the sewer improvements fund does have the activity that was recorded during the course of the year. What those funds are, there is $300,000 that is due from other funds that was recorded there. But the details of that, you know, I apologize. I'd have to go back to the, you know, I know it was part of one of the things that we looked at, but I wouldn't be in a position to answer that this time.
But that's what you're talking about in the problem of reconciling the intergovernmental activities, or the intergovernmental fund activities, because what should be used for one thing is being used for something else, and therefore there's no good way of following the money around and seeing that it gets funneled into the proper locations to be used for the proper reasons.
Right,
We put money in the recreation fund, and then we wonder why the playgrounds are in the shape they are in, because the money was borrowed out. Like you said, sometimes it was never returned. You can't rob Peter to pay Paul and hope to pay Peter back.
Right, and I think there is a, you know, interfund activity is a common occurrence. And I don't want to say that this, you know, from a industry perspective, all governments do this. This is how you manage cash. You know, hey, you got one fund that's cash rich, but doesn't have the need today. Well, instead of borrowing money for another fund when you got the cash, you just do. But that's a temporary transaction.
Exactly.
And when we look at it is to say, well, when you have an opening balance at the beginning of the year that says, and I'm making up a number, $80,000, and then you run the general ledger report and beginning balance 80,000, ending balance 80,000. Well, what that tells me is that that activity isn't necessarily a temporary item. And you have a number of these transactions that go back, you know, a number of different years, and you know, it becomes the discretion to go and say, how is it that what was the money used for? Will the money be repaid back? Does the entity have the ability, or does the fund have the ability to do that?
And if I'm not mistaken, I think this has been an ongoing suggestion of improvement, but unfortunately up until now hasn't been made. And to follow the money properly is one of the key things that you've got to be able to do. And this is not your problem. This rests with council. But if the transfers were actually made in an open and a body, a transfer like this, they would be recorded. Finance could then, or administration could take the agreements that were transferred, the resolutions of money that were transferred, record them, document them, and you've got them to know precisely where money has to be. But if you don't do that, then what you're back to is what you've just said. Money is going back and forth, and there's no real good. It gets funneled into different places that maybe it needs to go to, but there's no accounting for it.
Right, and I would agree with you, because I would believe that the more transparency that you bring to these transactions, the better, the easier it is for documentation. And then, if you will, you take out any, my words here, and I'm not, any potential ill will that would be, from a transactional perspective. Hey, I'm going to do this to cover this type of item, because you would say that you have the fear of, kind of public scrutiny to say, yep, this is why we need to do this. This is how we're going to go through and do this. And, which then goes back to having kind of a controller internal audit perspective in place that would say, in the event that transactions do occur within the purview of what management is given the authority to do, that gives you the opportunity to say, hey, wait a minute, why did this transaction occur? Go look into it. Did we use the funds in the best manner possible? Was the will of the city, if you will, was a proper decision made? And once again, that's not in a position from our perspective that we can opine upon, because that's not the scope of the audit. That would be different.
Two other questions that I've got, and they're a little bit different, but and I don't know if this is in the purview of your work, but one of the things that I think has always been lacking within city, and I don't know if it comes up within the audit or not, is the idea of central purchasing in the city. I don't know if there is central purchasing conducted in the city. I don't believe there is. And I think that would be one area that could certainly help benefit streamlining what needs to be done in finances, in keeping track, and also later on what comes back to you in needing to be observed at the end for an audit.
We don't have a capital budget as well. Even though if we can't afford this stuff, I've been asking for one for years, so we know what to anticipate that we may need down the road, and it's not there.
Well, I would go one step further than just saying a capital budget, that you really would want to have a strategic budget that would look more than just 1 year out as what it would be, or what are the anticipations that you see five years down the road, both from a operating perspective as well as a capital needs assessment, to say, here's what is going to cost, and here's how we plan to go and fund that future cost.
And believe me, I'm not here promoting a controller tonight. I do think we need to take a look at how things are done, however. Would it help us as an internal audit if, not only for the pension program that you've been commenting on tonight, to have a regular monthly update of what's happening and the expenditures that go on in there and accounting, so that we know what's happening on a yearly basis, so that we don't have to get shocked at the end of a year. But would it be best, I know that in times past, in the 90s when I was on this council, we used to get pretty much not just a check list, but an actual financial statement on a monthly basis. That in of itself helps as an internal audit, because council is well aware of where we're at and how we're doing on the financial footing, if we're getting into deeper and deeper debt as the year goes on, or if we're holding our own.
Well, by third-class city code, we're supposed to have.
And we're supposed to anyway, but I mean,
Mary Ellen did it, Juan did
yeah.
it, all right? And I fought for monthly reports, and there was a certain way that they were supposed to be done.
Yeah, not
And it
just for
was done in a
checks.
way that council could follow it quite easily.
Right.
And then they've stopped, and they've gone to maybe quarterly reports.
Well, and you know what, I think, quarterly reports all good and well, but I think that if you have a monthly monitoring, just like a home budget, just like a family, just like a business, you don't wait for the 3 quarters unless you've got, even the big businesses that do that and give you a quarterly statement have accountants that are doing it every day.
Right.
Let's be honest. So to have a monthly statement come on out to council in their second meeting of every month, I think might very well be beneficial. It provides one of the things that you've mentioned is an internal audit, and it helps keep us as council informed and the administration on track.
I mean, once again, I think the transparency.
I'm putting you on the spot, I
No, and I'm fine with it. It's, transparency. The more reporting, we always believe is better, and the more that you're able to put up into the system that would allow decisions to be made and monitoring to occur is great. But at the same token, there is some level that you want to achieve where management has some form of autonomy to make decisions and run the day-to-day operations. And so
Micromanage. What we're trying to do is just keep an eye on things so that we know when we're getting to the top of a line item and it needs to have a transfer put in. All right, we know what to anticipate.
Right. No, and I would agree with that. That I don't think that's necessarily. It's clearly not a bad thing. And I think at the end of the day, in some ways, the way I was raised, if you will, in accounting is that council should get what they want from a reporting perspective from that. But at the same token, there still has to strike a balance that would be there. That because I'm my career, I've seen it go completely the other way, where you get the GL detail printout, and that's
No.
yeah.
No,
And I'm not insinuating you're asking for that, but that's where the balance has to be in a lot of ways. Kind of have the grouping to come together to say, this is what we can provide. Here's what management's able to provide in a reasonable basis based upon the staffing that management currently has in their group, based upon their day-to-day activities. My thought would be, I don't think it's too difficult to run reports, but there's a number of different things that would go into that.
And that's probably my last question, because it seems like we're really hitting a lot of the things that you have mentioned here and some of the recommendations anyway. Let me ask you, are you comfortable with our software that it can produce the reports that, for example, that not only were given to you, as long as you're happy with them, that you were able to get out of the system, number one, were you happy with them? And number two, is administration capable of, because of what you got, of able to be putting forth the same kind of reports to council on a monthly, no more certainly than a bi-monthly basis, that we would be looking at in terms of this right now? Do you feel that the software is equipped to do that, or is it not?
Well, I don't think it's a software issue within the general ledger system.
It's a labor issue.
I think it's a partial labor issue. Then I think it's also as well as a partial redesign of how the software is, the information is inputted into the software. Okay. So if you will, you don't tangle the transaction coming in to then run a report that you have to untangle it to provide the information to, because once you do that, then it becomes a very labor-intensive process, which then you would say.
We've had it done up until this past year. All right, so we had monthly reports. We were able to keep track if, say, the solicitor was reaching and money needed to go in there. We also found out when money wasn't being in there and he was way over the line item. All right.
But it still does seem like, how do you reconcile the idea of, and how do you reconcile in a report that which is cash flow versus that which is the accrual? Now you're talking to a novice, so I'm out of my field.
Right.
So can you, and in a report, can that be had easily, or are we talking about something which is very difficult?
No, I think it can be done easily. And in a lot of ways, I would say that the accrual basis of accounting is not necessarily the management basis of accounting. In a lot of ways, you find a lot of your smaller municipalities run basically on a cash basis and then do kind of a once-a-year true-up for the accrual basis items. You know, if you will, you have a steady stream of expenses, you have a steady stream of revenue that's coming in. Well, the true-up from an accrual basis is somewhat not as important, if you will, from a management decision basis. It's important from a financial statement basis because we're at different bases of accounting. But the decisions that you're making on a day in and day out basis, what you would be saying is, well, how much cash do we have? Did we bring it, how much have we brought in? Yeah, and because, if you will, to the extent that you're short on cash, well, that would tell you is that the receivables up. Well, that would then drive a question to say, do we have a collection problem? To the extent that expenses are way, high, well, wait a minute. Are we really maximizing time value of money, and are we just paying things like this when we could be exercising, 30 days out or what have you? Or, all of our vendors, they give us, 2% discount if we pay within 10 days. Right. Yeah, let's go make, use of that, depending upon the terms and natures that are there. So, a long-winded way to say yes, but I think the bigger item is coming together with administration or with management to say, this is what we want to go through and be able to see on this time frame, and then how is it, and then what is the limitation that management currently has in not providing that today? Whether that is a, hey, we've got to go fix the detangle, if you will, right, and then we can go and provide it. Give me a little bit of time, I can figure it out. Or to go through and say, if you look at it, we have effectively 3 people that are doing accounting, and really what we need is a 4th. And there's always a cost-benefit analysis that the city has to go through and determine whether or not they want to have additional personnel that would be there that could potentially provide the information quicker or not. And I think in a lot of ways that has to be discussed jointly.
Okay. Thank you.
Thank you.
Like I said, it is in the city code, okay? It was an ordinance that was passed that we're entitled to it. So if we ask for it, we should get it.
Yeah, and my personal view is we didn't run into anything where we thought that information was being withheld or, it was like, hey, don't look over there. I think in a lot of ways what we found was the exact opposite. Like, hey, we need to understand what's in this number, and we know that we've got to go and untangle this.
That's all we wanted to do.
Yeah.
So I think that, then it becomes, what do you, I hate saying it this way, but what do you want? And just sitting down and saying, here's what I want, and then what are the inhibitors to that and fixing it.
I did that. I have emails that show it.
I got a question. As long as we have accounts due from other funds, there's no way you could ever have unencumbered funds, correct?
True.
If our cash is less than that amount.
Yeah. At a macro level, what you're saying is true, because you'd say, hey, I don't know what that $80,000 was for, but I know you owe me $80,000, and we have it balances out.
Oh.
But at the same token, is there an agreement between the different departments that actually move the money that, hey, you're actually going to pay this back to me? We have an accounting side, and we have kind of what is the business reality of the transaction?
At the end of this would have been December 31st, 2013. It says $588,000 is owed to other accounts, and the cash balance is $124,000. So, in reality, there was no unencumbered funds to start 2014. Correct?
I want to make sure I'm answering your question correctly. From a financial statement perspective, at a gross level, I would agree with that statement. But what we're not able to determine is whether or not that is the actual reality of the transaction or what the expectation is between the funds. So if you will, accounting would say, hey, we move money from Fund A to Fund B. Fund B is going to pay this money back sometime in the future. What we would say is, wait a minute, we have a reality that there was $80,000 at the beginning of the year, there's still $80,000 at the end of the year. And as well, then thereafter, well, okay, it's accounted for, but is it really ever going to be paid back? I guess that's where I'm coming from.
Okay.
In other words, the asset is there, the money is there, but it just happens to be in a different.
It's an asset as a bill, as an income, as being owed to you, like a loan.
Correct, yeah.
So it's not really, if there was a date, and a timeline to those transfers, then it would be encumbered. If it was,
Right.
so
Yeah, it's there. I mean, I guess we looked at it as
they
saying,
should be zeroed out if there's excess money.
right, yeah, you should pay the money back.
Okay, so,
You should, but then that's where I say the economic realities of it is,
but correct, it would be that we're instead of being positive 124,000, we're really 460,000 short.
If you're looking at the general fund net position when you say the 124,000,
Yes.
because included in that is the due from other funds of about $200,000, and what all that would really be is a reclassification from that as an asset balance to cash, or if you went through and you said the $947,000 that's owed to other funds, if you went and repaid that, that would be a reduction of the cash balance, but that wouldn't change $124,000. The only way that would be changed, that you would, and just speaking of the general fund, the only way that the $124,000 of fund balance position would be changed by the $200,000 of due from other funds or the $947,000 of due to other funds is if those other funds elected to change that due from to a transfer. So if you will, the 947, let's just say, all the other funds said, we forgive you, general fund, that's your money.
So
Well, that would be an income which then would increase that 124,000 by the 900 or vice versa with the 200.
So to clean this up, there should be transactions made to just zero these out.
Right. And you have enough cash. If you look at the general fund, you have 1.6 million, as of December 31st, you have $1.6 million in cash. So in theory, you could have paid back all the other funds to 947, and you would still have been at a fund balance of 124,000. Just instead of having $1.6 million of cash, you would have had about, I can't do math in my head, $700,000 of cash. Kind of the loan, accounts payable versus cash.
Okay.
Or receivable versus cash.
What do you recommend having cash on hand at all times? Percentage of budget?
Yeah, it's a great question. A lot of what's considered a good fund balance policy is typically somewhere between 3 and 9 months of expenditures. If you just take your general fund expenditures and divide it by 12, multiply it by 3, is what you would say you want to be at a fund balance position. From there, then it some way dovetails back to the strategic item to say, are there different strategic things that the city is thinking about in the future that you want to start putting money away today for, to be able to fund that without having to go to a alternate source bank, what have you, that would get built into that fund balance policy that you would say, hey, we want to have 3 months for this, but we want to go build a road reserve of X or a building replenishment reserve of Y that we're going to build over some period of time.
Thank you.
Thank you. Sure.
Have you seen other systems that are more efficient than our accounting system, or do you think that ours is adequate?
Well, I think in some ways it's a difficult question to say because I think that there is want to delineate that there is a software that's you can purchase, that's there, and then it's how it's implemented. And I think where the city isn't necessarily a software issue at this point, but how the account were set up, how the historical, how you record transactions, and kind of, if you will, the part of this is that, hey, we've done this way for X number of years, so why change? And
I think, if I could speak for it, I think he was referring to, he had brought up the Lancaster budget, am I correct?
Well, some other cities.
Yeah, and he was quite impressed with it, and we wondered if somebody else's budgeting practices we might be better off implementing instead of following the one that we have.
well, I would say a budget process and the accounting software are two different things.
It come and
If I just want to make sure I understand the question correctly.
Yeah, I mean, I wasn't talking about software and whatnot. We were just talking about the budget process itself, I'm sorry, Keith.
Oh, go ahead.
Other municipalities have an accounting, I had seen the one from Lancaster. I was impressed with it as well. And would we be better off following somebody else's? Is there a better structure for our budget?
I know what she's saying. I've seen other audits and budgets where they seem to line up better or match better.
Easier to follow as
Yeah.
well, too.
Um,
Is our budget adequate the way we do it, or can we do it in a better way?
Or have you looked at it?
well, I mean,
Are we archaic with the way we're doing our budget? But we're dinosaurs, we know that. You can,
the budgetary process is, let me answer the question this way. The budgetary process in any municipality is probably the first and primary control for a financial reporting. That's where you delineate the responsibility of what are the dollars that you expect to collect and who has authority to spend what during the course of the year. So from that perspective, improvements can always go through and be made for a budgetary process to go and say that if you're not, how it's being brought forth. Now, as part of our financial statement audit, we just looked and said, here's what the adopted budget was as a overall item, not auditing through to say, here's how the department submitted it, here's how the process was that was built to go in from the budget, because once it's kind of legally enacted for financial statement purposes, it doesn't really, I hate saying it doesn't matter, but it doesn't matter. But I think from the process, if you look, if I go back and as part of looking at what was in the paper and things that are there, I think there's clearly improvements that can be made through the process and the coordination that could be made that would allow for the budget to be driven down to say, here's the revenue that we have, here's what we want to go through and spend, here's what we have to go through and spend, here's the structural cost of running the city, and then going and building it through there. And then the reporting function from a financial statement perspective, with the information that would be in there, I think could then be within the software, could then be tailored to be able to provide that information. So I don't think it's a software issue. I think it's a process issue.
Yeah, and from what you said, that we had to detangle all of this for you in order to get you to be able to do the audit, it tells us we have a problem that we need to address. So that's, I think, why we were...
And working with management through that, as soon as it comes to, we really shouldn't be doing it that way, we're going to stop. So now what'll end up happening is, when we do 14's audit, we'll probably come back here and say, hey, we had the same issue.
We have a trouble. We have two budgets for 14.
Yeah, well...
Tell me which one.
Well, your financial statements, we're going to say, hey, we have the same issue because, a lot of waste management didn't start trying to fix it until this year.
We're not going to bite you, honest. You just ask questions.
And I think going back to what Jack said, what he was asking about the software, and I know that you said earlier that it's an older kind of software, but I think you said probably the way that it's implemented is the issue, and the inputs into the actual software is where we're coming out with the issues where it's getting tangled.
Correct.
And I think that's been an issue for a long time, years, maybe
Yes.
decades.
You're right.
The way that it was put in, and it needs to, because it was just always put in that way, so it just kept always getting put in that way, and you can't really sometimes find things, and someone else here has to go and find it for you because they know where it is, but it's not where it should be, et cetera, et cetera, et cetera. So to untangle it and fix it, to get inputted the correct way, software is probably adequate to get what we need out of it.
Correct.
If we fix those processes of inputting the numbers, basically.
And I would say in a lot of ways, the bulk of the transactions, we think there are picked up accordingly. You know, payroll, your regular disbursements, the receipts are recorded, and we didn't find where there was a lot of, issues where, that part of it.
The entanglement comes when they're transferring balance from fund to
the
fund. and
interfund
things like-
transfers, and then the pension activity.
Okay.
And if you
If we pull them out and fix them, then
the rest of it, I think you'll find that, or what we found was that, this wasn't, in our world, you always can do better.
Right.
But, you're not, if you will, it's not so bad that you can't get the information.
Right.
And then you can base your improvements on what you want to see through that, and,
and
building.
it just could actually, like, if you improve the process, it might actually save time in that process. When you fix it, it's going to save time overall in probably a bunch of different aspects of that office.
Yeah, and I think, and talking with Tom and, through it is that, there's a number of where he said, wait a minute, this transaction is recorded this way here, then you record it here, then you record it. So it ends up getting recorded 3 times.
Right.
Well, if you're doing something 3 times, of course, if you can do it once, it's going to save time.
Right.
And your chances of being accurate are 3 times as better because you have less chances of making a mistake.
Right, and I think that goes back, that's been going on for a long time, at least what I noticed.
Well, and I think going back to the interfund transactions, I think that's where it is. When looking at the predecessor auditor work papers, we know that this is where they spent a lot of time was untangling, and they had the bulk of their adjustments that they proposed were around the due from and the pension, and it wasn't, if you will, your standard payroll or
Right.
your core activities as much as it was these other areas.
Okay.
I think you've given us a roadmap here in the recommendations. Now the question becomes with the implementation of them. That's what everybody seems to be saying here in this DS.
We have
and I would agree.
difficulty getting the
Yeah.
implementation part done across.
Did you
Thank
have to
you.
make some changes to our previous audit, or I know you had?
Yeah, and that when we use the term restatement, that would mean that what we did is the opening balance, we restated it. So in other words, we changed that balance because really that activity did not occur during the course of this year. So if you take the write-off of those loans, the way that you write off a loan is you take bad debt expense. Well, if we were to record bad debt expense in the current year of the $590,000, that would misstate the current year's activity because really what we were determining is that impairment happened prior. So that's why you would go through and restate. We had a restatement as a result of a GASB 65, which requires bond issuance costs to be reported as a period cost instead of being capitalized and amortized over the life of the bond. So that was a change in accounting principle that we restated for that was there. So those are really what drove what it becomes when we say, hey, that asset doesn't exist or doesn't meet the accounting criteria. Then it becomes, well, how do you dispose of that asset, and recording in the current year period would not be correct because that would misstate the financials. Conversely, let's go through and say that, as an example, let's say all that 590 that, in July of 2013, company A who owes you $300,000 declared bankruptcy, well, then that would be a current period expenditure, and then we would have proposed the adjustment to be in the current period.
that's not a problem. You may restate at our previous audit. That's not going to be a problem.
Well, I mean, you never want to have to go through and do that, but in a lot of ways, the restatements do happen from time to time, and then it just becomes, and in a lot of ways, it's not a general fund item, so you don't have.
More the previous accountant, did they agree with you, or?
We talked through it with them, and this is one that I would say that we have. The basis of accounting for the zero interest 30-year loan, one can go make the argument that that there is accounting literature that would support that. But if you say this is all the accounting literature, our perspective is there's about that much that supports that perspective versus about this much that would supports the perspective of where we were coming from. And once again, that you really don't have, you close your eyes and you say, okay, I loaned somebody money that I'm not going to see for 30 years. It's not an asset in today's dollars. I even know that if you went through and you said, I have a legal loan agreement that would say otherwise. Now, in that loan agreement, they have to run the building in a certain manner. And so let's just fast forward and say next year they change the building to a bar, let's say, right? Well, now they would be outside the terms of the loan, and then that loan would become callable. And then what we would look through and say is, wait a minute, if you got the money back and it becomes a real asset, then we would pick up income in that current period as a recovery of a loan. If you look at the agreements and where the buildings are being used for, our feelings is that they're not going to be used for what they're not supposed to be used for.
Let him off the hot seat now.
Yeah. Any other questions? Thank you.
Well, and one other item, I'm sorry, within the financial statements that is a large estimate that we have is there is the lawsuit for the immigration issue. What accounting principles get you to is that when you can't estimate what the liability is going to be, you don't record anything. We have a disclosure in the notes to the statements.
I read it.
However, at some point, when that becomes finalized, that will be recorded as an additional liability.
He left a message on my phone. I talked to Mr. Kovac. They want to have a mediation session in Harrisburg. So that's where we're at with that.
And that was disclosed to us in the letter, but from an accounting perspective, we say
Can't do it.
can't nothing to be recorded at this time. But worst case scenario, you could have a large liability if mediation doesn't work, or the other courses that the city is looking at, if those fall through, and then.
No one's been awarded anything. The judge didn't even say, you have to pay this back. So there's no award
As of yet.
or judgment against us yet.
And that's the key, yet. And at some point, there could be, and we don't know what the number is. So, but that's an item we'll continue to look at. But I want to make sure that there's nothing recorded currently other than a disclosure in the notes to that effect.
Thank you.
Thank you very much. And we'll be finalizing our QC on this and be issuing these shortly. If you have any questions or anything, please feel free to call me at any time.
You'll get us the final draft and we'll approve at the next meeting.
If you would like, we can do that.
Unless, maybe, I don't know if the council has questions, but I'm sure in the next couple of days you can get us the final draft.
Yep.
And we'll put it on the agenda and approve it.
Okay, we can do that, and we'll get that to you.
Thank you.
Thank you very much. Have a great evening. Thank you.
For your time and your effort.
Thank you.